Hi there, Joe Cartaginese from the Joe team. Last night I met with a young couple, very inquisitive young couple. They asked about mortgage insurance, whether I thought it was a good idea or not. Mortgage insurance, absolutely, great idea. Now, there's advantage and disadvantage of the types of different products out there. The primary product that we're all exposed to is the one that's offered by the mortgage lender. They offer coverage on it. Mortgage insurance is basically term insurance. Now, with the mortgage, there's a few drawbacks and a few advantages. The one advantage is you sign off, you answer the questions properly, you're covered, you've got the coverage. The drawback to it is it's really declining insurance. And I'm really surprised that these companies that offer do not adjust their premiums on an annual basis. Let's give me what I'm talking about here is very simple. Let's assume that we have a $300,000 mortgage at 3%. Your premium is set on that. Now 2 years later, that mortgage reduces to $283,000. Your premium is still based on the $300,000 coverage, but yet if anything should happen, they're only going to pay out $283,000. Now imagine 5 years later, or 3 years later after that, the principal reduction will be even that greater. I'll give you an example. After the first year, the balance goes down to $291 approximately. 2 years, $283. So it's declining an average of $8,000–9,000 per year. So you're paying extra premium for no purpose. Now there is alternatives. There is independent financial advisors that can set up term policies for you that will always have the same coverage. Now there's another disadvantage to the mortgage insurance. That mortgage insurance is married to the mortgage. If for any reason you should, number one, pay off the mortgage, no more mortgage insurance. Number two, if you wanted to change homes or increase your mortgage or make any changes to that mortgage, it's a brand new application. So that mortgage insurance stays with that mortgage. A new product would be replenished. Now, the third situation that's sad is if something should occur, that will pay off the mortgage. A few years ago, we had a client that had term insurance, and one of the partners passed away, but they had the term insurance, and the wife was left with two teenage children, both on their way to university and college. Now, she received the insurance premium from her husband passing away. Now, she had the option of then, with that money in her hands, to do as she pleased. So she used that money to continue and paid for the education of the children, gave them the lifestyle that they should have been accustomed to if the father had not passed away. If that insurance had been attached to the mortgage, there wasn't any questions. Mrs. Spouse, would you care for the check? No, the mortgage would have been paid off. She would not have had any cash. So the nice thing is that story concluded extremely well. The children were proceeded on to university and college. They're outstanding young people today. She was able to manage her debt, and she's doing extremely well today. So that's the other downside of mortgage insurance offered by the lender, that it is married to the mortgage. Now, there's other options out there. Explore them. I would strongly suggest meeting with a financial advisor and see what products out there work best for you. Now, at the same time, we know about human nature. If you don't have term insurance at the time that you're getting a mortgage, my suggestion is accept the lenders. It's the best of the two evils, because most people will not go out and get it after the fact. But if you take it with the mortgage, there might be some motivation, especially if you understand that you're probably paying too much for the product. You will go out and replace it. You can then cancel it. So it's better to have that than not to have any. The other point that I want to bring here is, and I got this quote from somebody else, I don't know who, and I can't take the credit for it. I thought it was brilliant. Most young couples today will spend a year or so to plan for one day, but will not spend a day to plan for a lifetime. Please don't be one of those. Turn it around. Lay out some plan of attacks. We cannot go where we need to go without having an objective. If we go on a field trip, if we go on a road trip, we have a map. The planning is your map to your life. Now, I will be discussing these mortgage insurance at a later date. In the meantime, please, if you have any concerns or any questions, send them to me. I will try to answer them the best I can. And if I don't have the answer, I will get the answer. Have a great day. Thank you.